station of TFNN. The Trader's Edge with your host, Steve Rhodes.
Good morning from TFNN. Welcome to the July 1st. How about that, folks? July 1st. Terrific Tuesday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone had a magnificent Monday. Let's make sure we do all that we can do to have a terrific Tuesday. I'll do everything I can during the next couple hours to teach you how to master the tools for trading, and that includes the tools of the mind, because when you and I, when we can master the tools of our mind, we begin to think like a strategist, and that's really important as applies to every aspect of our life, especially trading. Now, some of the tactics we use in technical analysis are A to B equals CD patterns. We'll look at those today. Fibonacci expansions and retracements to help us identify the floors that prices are moving to or expanding to. Gartley and butterfly patterns, and, of course, Japanese candlesticks, because these are the signs that the bulls and the bears make for you and I each and every trading session. Now, unlike most traders who focus on tactics only, you and I, we know that to really achieve our goals and dreams, we've got to always think like a strategist. And the real key to trading and investing, the real key to get our money to work harder for us than we do for it, is to have a strategy. That's what I call Mastering Probability. It's also the name of my daily newsletter service available here at TFNN.com. You see, using tactics without strategy is a recipe for failure. And failure, folks, it's not an option in our playbook, which is not to say we don't incur losses, because losses are a part of every successful trading strategy. It's what's called spoilage, just as running a household means throwing out food that's gone bad in our refrigerator. Now, to limit our loss, to control our risk in trading, we always use stops, and that means we always have an exit strategy, one that covers both sides of the trade, what's referred to as a bracketed OCO order. One cancels the other, and if you use a system like this, you'll never ride a market down, as most did from 2007 to 2009. So use those, folks. Use stops. Now, today and every day, let's do all that we can do to think like a strategist, because strategists, they will slay the tactician all day long. So let's take a moment and review one of our tools, the tool I call Live with an Attitude of Gratitude. You know, gratitude touches the ultimate foundation of our human existence. There's hardly another quality within each of us that is so suited to reveal the state of our true capacity. You know, no one can be grateful to himself, for gratitude goes from one person to another. And folks, that's why I'm grateful for your presence here today. Gratitude goes from one person to another. It's just that simple. So please take a moment. Make sure you have your gratitude list. If you are a new listener, I have suggested for years and years to really take that smart device of yours and really use the power, and the power of that is in that memo pad. Write down all the things that you are grateful for. And if you can't come up with anything, just ask yourself this question: what could I be grateful for out there? An attitude of gratitude, folks. I promise you that will work. It is Terrific Tuesday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we've got Dow futures up about 50 points, trade out at 16,789. S&P futures up a little over 5, trade at 1957.75. NASDAQ futures up 14 points, they're trading out at 38.54. King dollar up 3 pennies, trade out at 79.85. Goldilocks up 6, trading at 13.28. Silver up 9 pennies at 21.15. Light sweet crude up 47 cents, trading out at 105.83. Our call-in number is 877-927-6648. A quick peek across the globe out here, we'll see that over in Germany, the DAX is trading up 25 points, 0.25%. FTSE up 42, 0.6% over in Asia last night. Nikkei having a nice strong session, up over 1%, 164 points. Hang Seng, on the other hand, down 30 points, about 0.1% to the downside. I think last couple of nights has been down about 0.1 each, and the Shanghai was flat. It was up 2 points out there. So where do we begin our day? Let's begin our day. Let's go take a look at Goldilocks. Let's go see what gold is doing out here. We'll put that chart up on the screen for you. This is the daily chart for gold. This is my e-signal screen out here. What you're going to notice, or one of the things that you should notice, is the following. You're going to see a little red line, horizontal line going across the top of my screen. That is a market profile. That's provided to us by our friends over at TAS Signal Box. And, there's a video each day. It's on the homepage of TFNN.com. It's out. John Logan puts it out each morning at about 8 o'clock, I believe it is. So there's a video out there. You should take a look at it. And it's a great tool for helping us to identify the congestion spots in the marketplace, much like driving a car down an expressway. You know what it's like. In fact, if you live in the Orlando area, you know that around that Fairbanks curve, it seems like no matter what time of the day, you're going to run into traffic out there, and then once you clear the traffic spot, you can open up that throttle, and you can start moving faster. Well, a stock chart has its market profiles as well, and it identifies congestion areas, and once you clear those, then you're free to move higher. Well, key session here for gold today. Trade down to 13.27. Now, of course, I've got a little 10-minute delay here, so maybe just slightly above or below that level. What we want to be paying attention to, what you want to be paying attention to inside gold is a number of 13.2660. If we see it close above that level today, we've seen an intraday spike. We're trading just slightly above it. If you see it close above that, boy, you've got freedom. Goldilocks has the freedom to run. Well, where will it run to? Very simple. On any stock chart, when you're doing any kind of analysis, you're trying to understand, hey, where's price going to gravitate to? Whether it's to the upside or to the downside, the very first place your eyes should gravitate to. And I did pause there because there are really two places, and we've got two eyes, so there's two places for your eyes to gravitate to. One's going to be a swing point. The next is going to be volume. So if you can kind of move your eyes so that they're both looking at volume, in this case here, inside of Goldilocks. So we're not going to use it because this is a chart here that's configured in order to stitch together all of the futures contracts in order to really provide the accurate market profiles, the accurate support and resistance levels out here. But what you're looking at, if you take a look at the swing point, is March 17th. So as long as gold closes today above 13.2660, it offers the promise of moving back into that swing point. That swing point, high and low. The high is 13.9340. The low is 13.62. That's the price range where Goldilocks should travel to if it can close above 13.2660 today out here. If you take a look at retracements are just natural elevators, natural floors where price also moves to. If we go from that swing point high down to the low that was put in here, looks like that low was put in on the trading session of June 3rd out there. What we're also going to see is that price right now is bumping its head right up against the 0.618 retracement level. That number is 1334.90. So gold has on a stock chart, we don't really care what is behind. We don't care what the symbol is, because the analysis that we do here is uniform. It's the same no matter what it is that we're analyzing here, or analyzing. And that is this. We take a look at the floors of the building, in this case here, the stock chart. In this case, we're looking at gold. We go from a swing high, we go to a swing point low. So the swing point high, we identified that. That's where price would like to get up to. We take a look at that swing point low. The swing point low out here, June the 2nd, June the 3rd. Let's see, the low, 12. So it is the June 3rd level, 1240.20. So you go from the high down to the low. You'll see that the 0.618 area, so 1334. So I'd have to say today, not just as important for gold to get above its market profile, 1326. Gold's going to get up to that next elevator, which is the low of the swing point, at least, of March 17th, which also happens to converge with the 0.786 retracement, another beautiful Fibonacci number. Gold really needs to get above 1334.90 today. If it does that, that's what really offers the promise of moving up to that 1360-ish area. And that is what's going on with Goldilocks. Let's go take a look at silver. Let's look at high-ho silver, see what it is doing out here, traveling out at the price point of about $21.07. Actually, that's the market profile. It's really trading at 21.15 out here. Nonetheless, let's go take a look at its market profile, its patterns, its area of support and or resistance out here. And silver has been in a full bullish mode for several days now. It is, well, quite frankly, ever since that breakout session on June 19th out here. So where does silver want to gravitate back to? Well, it's February 24th, a swing point high. And that range takes it to a low of 21.55 to a high of 22.22 out there. It looks like that is where silver, high-ho silver, is headed to. Let's go take a look at light sweet crude. Let's go see what it is doing. Light sweet crude right now trading out at 105.77. But let's look at its market profile out here. Not good for you or I at the gas pumps out here. Light sweet crude continues to test the resistance level. The resistance level of its market profile, which this one here was formed back on the trading session of June 18th. Price got above that level. That's at 105.10. We've seen price come down on several occasions. One on June 19th, the first occasion. June 26th, the same. Yesterday as well, June 30th, tried to get back inside there, and price just said, no, not letting you back in. What does that suggest? It suggests that light sweet crude ought to go test the June 23rd high out there, right around the 107.45-ish type range. 877-927-6648. Right now we've got the Dow futures. They're up 46, S&P up 4.5. We'll be right back, folks.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
with the launch of TigerTV. TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. Let's take a look at what's jumping in the pre-markets out here. We've got Netflix. Netflix closed out at $440.60 yesterday. It's up $15 here in the pre-market, up 3.5%. $450.82 is its market profile high out here. Let's take a quick peek at Netflix. Netflix has been moving into its swing point, its all-time swing point high, which is the trading session from March the 6th out there, 458. That had volume of 1.6 million shares, and price had moved up there with volume, 2.6 million shares on June 18th. And that projected that at least the high should be tested. So we'll see that high get tested here this morning. Should get it tested this morning, I would think. And if you see it close above 458 with volume exceeding 1.7 million shares today, that would be extremely bullish for Netflix, would suggest another leg to the upside out here. The market profile resistance level 450.82, so you want to see a close above that as well today from a bullish standpoint of Netflix. Any close below 430.401 would be trouble inside the Netflix store. Also the upside, we've got Salix Pharmaceuticals out here. Right now up about 11%, up $13 and change. It closed out at $123.35. It's trading at $137. It's going to take out a swing point this morning. Should take out a swing point this morning. Take out its resistance of its market profile that formed here yesterday. The swing point just from a few trading sessions ago, last Tuesday, a week ago. That high, June 24th, is 126.60. 1.2 million shares out there, so several A to B equals CD patterns. If we take a look at the small one out here, an A to B equals CD pattern allows us to measure where price wants to likely travel to. That's what we refer to as our lightning bolt pattern out here. That would say that Salix might want to move up to about the 140.68 type level. Let me put this on a weekly chart. Let's go see what it's doing on a weekly time frame as well. We'll see another A to B equals CD, a larger one here. So let's go take a look at it. Now, it took out a little shooting star from February the 24th. The week of February 24th gave a little reversal signal. No follow-through on the following weeks, though. That high, which is going to be our B point of February 24th, is 120. So if we take a look at the longer term, and a shorter A to B equals C to the upside. The longer term says we'll use as a point right around the September lows out here. September of 2013 is what I'm referring to. We'll use that shooting star that occurred the week ended February 24th as our B point. The retracement takes us down into low on April the 14th. That says 1-to-1, wants to head out to about the 148-ish range out there. Volume on that B point was 6 million shares. It got above that with 6.6 million shares. So it already has a confirmed A to B equals CD to the upside, and that should be fulfilled with a price move, a minimum price move, up into the 148 range. Only a 48% retracement on its weekly chart. That offers the promise of maybe the 163 type area. That is on Salix Pharmaceuticals. To the downside, we've got Western Gas Equity Partners. She closed out at 62.70, down a couple of bucks, down about 3.5% here this morning, trading out at $60.60, but that itself is not a problem. Of course, we'll just have to see. Well, that's a weekly chart. Let me put the daily chart on my screen out here, see if maybe it is more of a problem. No, really not. It's resistance level, 5740. That's a market profile out there. So if, in fact, it can hold that area, 5740, and I would have to say if it can hold it on a volume of less than 399,000 shares out there, it ought to do okay. That's on Western Gas Equity, where I'm going with that. Remember, I said your eyes ought to gravitate to two areas on the chart immediately. We've got two eyes. One's going to be a swing point. Well, in this case here, there is no swing point. So unless there's some major volume today to the downside, that would be bearish. Why do I say that? I say that because that would then be volume off of the high. So it's at an all-time high. That's Western Gas Equity Partners. But otherwise, and where my eyes also went on that volume bar was the trading session of June 16th. So we'll take a look maybe into the trading session if it holds its numbers to the downside and see where it is headed to. We've got block, H&R block. HRB is a ticker symbol. She closed at 33.52 right now, trading at 32.92. 31.96 should be a level of support. This broke out. We take a look at H&R block. Had a nice little breakout on June the 11th. Volume out there was 6.7 million shares. So if it gets below, it ought to test the 31.24-ish level. Again, 31.96 should be support. But it's breakout session. If it pulls back into, let's say, the high of the trading session of June 10th, that's out at $30.75. It can do it with less than $3.5 million. That'd be nice. Certainly doing it less than $6.7 million. It's just coming back to a breakout area. Right now, in the futures markets out here, we've got the Dow still up 44 points. S&P futures up 4.5. When we come back, we'll go take a look at, is there anything that can get in the way of this rally? We'll go take a look at that. We'll be right back, folks.
It's always better when we're together.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
And we're up to the races. We got the Dow up 81 points, trading out at 16,909. S&P up 6 at 1966. NASDAQ Composite up 22 points at 44.29. Russell 2000 up 6 at 11.99. NDX 100 up 17 at 38.67. New York Stock Exchange up 43 points. She's trading out at 11,023. A nice little pop there at the open. The Dow futures going from 40 to over 100 points to the upside out here. Let's start taking a look at. So I asked the question, what could get in the way of the rise inside the market out here? Let me go take a look at one chart. Let's put this up on the screen. Well, let's go ahead and take a look at a couple things that we just, I've lived in Florida for over 30 years now. It's a beautiful thing. And, in Florida, that means we are used to hurricanes. Now, the cool thing about hurricanes versus a tornado is you spot them early. And, there's all kinds of systems that try to influence or forecast, all kind of models, right? The kind of models that forecast the direction, the path that the hurricane might travel. Do they work? They work sometimes. Inside the stock market, there's also some hurricane advance warning patterns out here, and that's what I've got up on my screen right now. And that is our favorite currency pair. That's the Euro-Japanese yen. The Euro-Japanese yen, this has been extended as long as any pattern that I have seen out here. When the Euro-Japanese yen is moving in one direction, in this case here, it's moving lower. It's been doing that really, quite frankly, ever since the December time frame out here. It made a high back on the December 31st time frame. It's been making lower highs out here. Let's just take a look at the current area here. The current area that I'm referring to is coming back into the June highs out here around June the 6th or so. We've seen the ES Mini, that's what's at the top of my screen, moving higher. We've seen the Euro-Japanese yen moving lower. All except for one time in the past several years has this pattern not resolved itself in the direction of the Euro-Japanese yen. So that's one thing that could get in the way out there. There's another chart out here, so that takes care of the S&P with regard to a potential message out there. It can be resolved, certainly with the euro-yen trading in a upwardly northerly direction out here. We'll go take a look at that currency pair here momentarily. Another element out here, I began showing this chart here to subscribers late last week. This is the chart of breaks down the. If you're watching this on Tiger TV, the upper portion of the chart is GE, General Electric, the general out there, and the bottom portion of the chart is the Dow. Now, GE, very small weighting structure with inside the Dow out here, but it's a weighting structure enough that it gives a very good indication as to a leading indication, I should say, as to what the Dow itself wants to do. And if you're watching this on Tiger TV, I'm using the trend line here. Trend lines are great tools. And I'm coming off the trend line from the October 2013 lows. This is in GE as well as the Dow down at the bottom. So the bottom portion of my chart is the Dow. And if you take a look at that trend line, the bottom of my trend line hits in the December 12th-ish area. Probably was December 18th. It was Uncle Ben's going away birthday party out there. Not a birthday party, just a going away QE party, I guess. If we take a look at that trend line, we can see that right around January 6, 2014, GE broke through that trend. GE broke through that trend line, and it took until January 26, 2014, before the Dow actually broke through its trend, and we saw that move down into the lows in February 5th, where they both connected. They both started going again and moving in the same direction out here. The little red the little red solid lines on my chart on the on GE versus what you see on the bottom portion, which is the black lines in the Dow. Those show divergences. And what it is that the market typically resolves itself, the Dow that is, resolves itself in the direction of GE. So what's the message of GE? Well, if we just take a look at its most recent trend line coming off of those February 5th lows out here, and I'm using as the next low somewhere right around the April 11th-ish type low out here inside GE, what we're going to see is that on June 25th, remember, June 24th, kind of interesting, we had a key reversal session inside of the market. So we had a key reversal session out there, June 24th. We'll go see if the S&P is taking that out. We'll give you the numbers there where it needs to close above today out there, because that is a resistance area. But on June 25th, the very next day, GE shows up, knocks on our door, and says, hey, guess what? I'm going to give you another signal. And unless GE can get back inside that trend line, if it can get back inside that trend line, then I'll say, okay, things are back in place. It's gotten itself back in alignment with the market out here. But right now, that is not the case. Now, the Dow is not broken through that trend line. The Dow is the weakest of the four indices. No question about it. It's the weakest. But when we take a look at that trend line here in the comparison and evaluation of what's going on inside of its chart, coming off of its lows back in the February time frame, and then using as its next touch point the lows back here in April, see it has not broken through its trend. Remember, it took here from the 16th to the 26th for the Dow to finally crack. That was 20 days later. I can't tell you whether it's going to be 20 days later. I can tell you whether it's going to be today, tomorrow, or what have you. But it is something that we really should keep an eye on. So we've got two great correlation charts out here. And if you ask me what is it that could get in the way, well, it's this little hurricane pattern, or these patterns out here that are suggesting it's the only signs of real caution that I'm able to see inside of the markets. Now, we did get some caution signs last week. We go take a look at those out here. Let's take a look at the S&P 500. Let's do that right now. We'll go take a look at its June 24th level, because that is really going to be key. And June 24th, because it was a key reversal session, that is bearish. If we take a look at the S&P 500, I've got that on my screen right now. We'll see the 1-to-1 and the 1-to-1.272, A to B equals CD to the upside. 1974.05 is your 1-to-1.272, A to B equals CD, and a close above the June 24th high, which is at 1968.17. 1968.17 also happens to be the market profile high out there. If you see a close above that, that would be very bullish. Now, very bullish, does that mean that it ends at 1974.05? No, not necessarily. 1974.05 just happens to be the next floor up on its A to B expansion tool. Remember, 1-to-1 A to B equals CD only occurs 60% of the time. The other 40% of the time, it's one of the other expansions. Could be a 1-to-1.272, could be a 1-to-1.618, could be even beyond that out there. But that's what we use as guides to help us identify where price is gravitating to. So far today, the high inside the S&P 500, 1967.53. Remember the key number to be watching, 1968.17 out there inside of the market. That's inside the S&P 500. So right now the Dow's up 88, S&P's up 7, NASDAQ Composite up 27 points. Let's go take a look at some things here that are moving in the marketplace. We looked at Netflix earlier this morning. You've got Priceline in a full bullish mode out right now. It's up nearly 2%, up 22 points. Well, maybe it is, maybe it isn't, right? Let's go take a look at its stock chart. It's up nicely this morning. What is it doing? Well, it's trying to trade back into, it's been like consolidating, it's been consolidating, a little congestion area here. But if we take a look at its market profiles, 1235.32 is going to be an important number. Any close above that would be bullish to neutral inside of Priceline. What else is in that area? Well, its most recent swing point, which was from June the 12th. 966,000 shares traded hands on June 12th out there. The first test of that area was on June 26, much lighter volume, 555,000 shares, and that swing point was rejected. Today, so far in trading, much nicer volume inside this equity, 111,000 shares, and only 13 minutes of trading out here. So if, in fact, it can close inside that and get above 1235, it offers at least the test of the C point of the A to B. Now, this completed a 1-to-1, A to B equals CD to the downside. The A point being the trading session for May 29th out there, right around the 1292.66 level, not right around it, how about at it? And then the B point was the move down, straight line move down into June 11th, down at the, 1213.04. A very small, well, let me see, I don't know if it's small, looks like a maybe a 60% retracement into that C point, that swing point that we're taking a look at now, June the 12th. That's at 1264.80. 1-to-1 A to B equals CD. I gave a price projection of 1185.18. That held right at that price projection, by the way. There was also a nice little sign of strength inside of Priceline. That took place on May 27th, where you had volume of 1.3 million shares to the upside. So there's a little bit of a gap there. Price came back into that area. It did it on lighter, 1.7 million. Yeah, it came back there with volume out there on June the 13th. So that actually is saying, might want to go take a look at that swing point back in May, that high volume swing point level. So if, in fact, you see Priceline right now it needs to crack the low of June 16th. June 16th says price ought to go down and test the May 8th lows of about 1087.26. So right now, I would say that Priceline remains in a bearish type mode out here. PCLN is the ticker symbol, traded out at 1225 and is the leader dollar-wise to the upside inside of the markets right now, up $22. Netflix up $21 out here. If we take a look at Regeneron Pharmaceuticals, up a nice 5% this morning, up $14.53. It's getting above its resistance level of its market profile at 289.63. It's trading at 297 right now. Now this, let me see here if it ever confirmed an A to B equals C to the downside. No, it did not. It tested its swing point from April 28th. That had volume of 1.2 million shares out there. Came down and tested it with 1.6 million shares, so it's pushing down with volume. They was able to hold that level. Now today, this is suggesting that it probably wants to get up into the 305-ish type area. Its old support line of its market profile, maybe even wants to try to go revisit its C point of the A to B equals C to the downside that thus far has not confirmed. Moved down with volume, but never broke the B point, and therefore, okay, maybe this is now just going to set up a consolidation. The consolidation would be in between the 273 level all the way up to about 320. Volume right now behind Regeneron Pharmaceuticals, 305,000 shares. That is going into a little downdraft here that at 928. Not too bad, not too shabby there for Regeneron Pharmaceuticals. So that's saying to me that it actually does want to try to move up and go test that swing point from June the 9th out there. That level being between 311.61 and 320. Regeneron Pharmaceuticals, REGN is the ticker symbol. Let's go take a look at to the downside out here. We've got Timken Company. Let's see what, they've got a spin-off of Timken Steel, so let's not spend any time taking a look at that. How about North Star Realty, NRF, down 51%. What the heck is going on there? There's another spin-off, so let's bypass that one. How about, let's see if this one's not a spin-off. There we go. Synergiva Pharmaceuticals, GEVA, is the ticker symbol out here. It's trading lower this morning, a gap down. Looks like we've got some volume behind its move out here. Let's go see what this is doing. So far today, volume down 143,000 shares after making a recent high with 256,000 shares. So that is not a good scene because that could be the C point back on the June 25th trading session of an A to B equals CD to the downside. It's trading right now into its market profile support level right at the 92.78 mark out here. Let me pull this back a little bit further, see what we see inside of Jiva, which is Synergiva Biopharma. We saw some institutional selling show up in this equity back on the trading session of March 6th out here. had volume of 1.4 million shares to the downside. That's the biggest volume day that I see on the stock chart. If this is in fact trying to form an A to B equals CD to the downside, let's go measure where price ought to move down to. The 8 point's going to be the high from February 28th. That high was out at 119.42. The B point that's going to contend with on any break lower here this morning is going to be back on April the 4th. That low, 68.99. The C point out here coming in on June 25th. That high was out at 108.23. So a 0.786 retracement. This would suggest a break of the support level where it's trading into right now with continued volume. Want to take this equity number one down to about 68.99 to the 77.74 area. A break of 68.99 ought to take it down to 57.80 and a change out there, because the change could be 44.09. The one-to-one happens to be $57.80 out there. That was on Synogiva Biopharma. Also to the downside here this morning, we've got Acuity Brands. Looks like they're out with numbers, generating net income of $43 million versus $41 from the prior year. So beating that, let me see if I can find any kind of revenue numbers. Sales, $603 million. So it looks like that was up 11%. Nonetheless, they are trading to the downside, breaking their level of support on its market profile. Gapping down this morning. Volume, now this thing had some major volume back here on the trading session of June 27th. Big volume, 3.8 million shares out there. This does have a consolidation. It does have a gap. It does have a breakout, I should say. That was on January the 9th. Looks like that's where it's headed back to again. Now, this thing broke out January 9th with 1.9 million shares. Price moved up to a higher high. It made a high back on March the 4th out at a price level of 146.28. It pulled back into that breakout area to the bottom of the gap and tested it with only 597,000 shares. So it looks like price is going to head back down there one more time, 119.06 or so. 877-927-6648. Be right back.
It's always better when we're together.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these three conditions. 1, choose only one pearl. 2, remove one pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. Dow's up 97. S&P is up 7 points out there. NASDAQ Composite up 33. Had an email from a listener asking me, where do I get my pre-market information from? I don't know if you refer. I don't think you're referring to the futures. So maybe it was when I talked about what was going on inside the pre-markets. And really, I have been using eSignal as my data provider, my absolute primary data provider forever out here. So it's coming really from the eSignal system out here. You've seen me gravitate towards using the charts here. I use 3 charting packages, all of which are fed, by the way, with the eSignal data platform. When I take a look at, for example, at the Euro Japanese yen out here, when I'm trying to draw some Gartley or butterfly patterns out here, this happens to be a Gartley sell pattern. This is the Euro Japanese yen that we're looking at. This is the 120-minute time frame out here. You'll see some nice Fibonacci numbers together, or let me describe to you what they are. If we're taking a look at a retracement of a 0.618 retracement off of its high from about 9 p.m. in the evening on June the 8th, down to the low that was put in here inside this currency pair at 5 p.m. on June the 12th. So you got a nice 0.618 retracement. The 1.272 expansion of its swing points, meaning the B to C swing point, would have taken place at 139.20 at the time frame against a 2-hour chart we're looking at. So at 7 p.m., during that 7 a.m. session this morning, I should say, the actual high was 139.12, so close enough. So you've got some real nice Fibonacci numbers out here. We are seeing a bearish reversal pattern out here. It's a bearish engulfing candle that took place at 9 o'clock. Now, what's needed for this currency pair to suggest a further retracement in its 120-minute time frame is a continued move lower. If we see that, that then offers the promise of a retracement into a minimum of the 0.382 area, which is 138.56, more likely 138.21 out there. And there you'll see a little bit of divergence in the marketplace because you'll have the euro-yen giving you a sell pattern on its 120-minute time frame chart. Also happens to be on the daily chart as well out there. If I switch over to the daily chart, you'll see you'll see the same butterfly or the Gartley sell pattern out here. Now, in order for the daily to really get bullish, it'll need a full reversal, not just that retracement that we were looking at on the 120-minute time frame chart. So, and I also use the eSignal data to feed my Rhodes momentum indicator charts out there. And for example, here is the 30-year Treasury out here. If we take a look at the 30-year Treasury on the upper portion of my screen, I've got the weekly time frame. Always good to know what's going on up above and below you when you are trading out here. So here is the weekly chart. The weekly chart for the 30-year Treasury has been on a weekly basis, been in full-blown bullish mode ever since the trading session of, well, it started to get there really right here, February 9th, 2014. The week ended there. That moved it right into a full-blown bullish mode out here. So the weekly chart still looks strong for the 30-year Treasury. The bottom chart is the daily chart. I can expand it out. We can see that there was a nice 50/200 bullish cross. That's the black line crossing over the red line out here, a good red line. That took place on May 14th. So the golden cross is really what it's referred to. Last time we saw any cross out here was the death cross inside of the 30-year Treasury. Now, it's a continuous contract that we're looking at on my screen. Only way to be able to get all of the accurate numbers for this pattern out here. That took place back in May of 2013. So the Treasuries out here, 30-year Treasuries, nice full-blown bullish mode. Folks, it is Terrific Tuesday. I am grateful for your presence here today. Have a great day. I look forward to seeing you early tomorrow morning or perhaps in about 8 minutes. Take care now.
Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.